Well, ladies and gentlemen, my name is Greg Michalowski from ForexLive.com, and this is a technical preview for the week of September 22nd, 2014 for the dollar versus yen. I know it's high, but we know that the dollar yen is high. We know that it's probably overbought from RSIs, and maybe we have diverging RSIs as well. Things like that say the market is overbought, but it is a trending market. And what are trending markets? They're fast directional, tend to move in larger trading ranges. We also know another characteristic of a trending market is that people tend to make a lot of money in trending markets. That is where you make the most amount of money with the least amount of risk. Your capital is not at risk if you catch a trend because you don't lose any money on it. Your capital is moving to the upside as long as you're on that trend. Just ask Ryan Littlestone with his positions in the pound and the euro, pound versus US dollar, and the euro sterling in last week's trading. We also know that if you're not on the trend and you're not making the most amount of money or making lots of money in a trending market, you have the potential of losing a lot of money in the trending market. That is where the most money is lost, is in a trending market. Finally, there's this opportunity cost. If you don't get on a trend, you lose out on the opportunity of potentially making a lot of money with the least amount of risk, which is what you can possibly do when the market does trend to the upside. Now, I don't want to relive the whole trend move to the upside here that took the price where the market was non-trending right here above trend line, above the 100 and 200-day moving average here first, and then above the trend line, and then above this high, and then blah 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 blah. But I want to focus here on last week's trading a little bit here, and note here that the market made a break to the upside here, a break above a topside trend line, and that was another window for a move to the upside. I'm going to go to the weekly chart to just bring it back in a little bit here, and I'm going to put my cursor here on the trend line here to show you that at around the 107.35, 35, 36, 37 type of area, that is when the market broke to the upside, where we broke above the topside trend line. This trend line connected highs from 2013, 2014, and then in not last week's trading, but the week prior's trading. This is last week's trading. This is a week prior's trading. So we broke above that level at the 107. Let's call it 36 level, okay? And so we're moving above that topside trend line. Now we know it's high, but we're in a trending market, and that trending market continued to the upside on this day, on Wednesday, and we continued on Thursday, and on Friday we even continued to the upside. Now, if we take a look at the hourly chart, and we put our a horizontal line, if we will, at around that 35, 36 level, let's put it right there. We can see this on Wednesday what exactly happened, and note here the blue line here. What does the blue line represent? That blue line represents the 100-hour moving average. And on Monday and Tuesday we corrected, and we went a little bit below the blue line, but found support here, and then we moved back above the blue line. And we had a period here of, I don't know, what are this, like 16 or 17 or 18 bars where the market didn't really go anywhere, but we stayed above the blue line, all right? And we had no closes below the blue line. And then we started to break, and we moved above the 35.5 level, which was our old high from last week, and we came up, and then we corrected down, and we corrected down to that line, to that, right at that line. And the market said, stop right there. That's all we're going. We just held the 100, and we've held this level right here. And if you bought at 50 or 51 with the stop below the 35 or 36 level or whatever, that's a trade that's worth taking, even though it's high, but it's high, but. Let me take it another way. If you're inclined to sell at that level, you better do it with the caveat that this price better get down but back below that 36 level, and it better stay below that 36 level and start to move down to and through the 100-hour moving average. If it doesn't get below that level, then soon all bets are off and I'm getting out of that trade. I don't care how high it is. I'll get another chance to sell it if it starts to come down. That's the mindset that you have to protect your capital. And if you don't, you have the potential for the market to do this, what it did here. And you'll be, hopefully you scramble and you get out, before it heads up here. But it's not the way that you should be, okay? And that opportunity cost and all that stuff that goes along with it. Now, I'm not saying you're going to catch every trend. And please don't think that anyone or everyone catches the trends. But these are things that you want to look for, okay? Use your eyes and look for, and say to yourself, I know it's high, but do I really deserve to be short? And so let's look at the, so let's fast forward and look at where we are now, because we are at a high level, but we have to keep that but in perspective. And on Friday we had a move to the upside that came to what I call the underside of a broken trend line, okay? This trend line was not just an ordinary trend line. We had a number of different spots along the trend line where the market held, and then we finally broke through it last Monday and Tuesday. So it was a significant trend line, okay, and led to this little correction here. Now we did come up to the even though it was gone, we broke through it and all. I like to keep that line in there, and I kept it in all week. And lo and behold, the market came up to the underside of the trend line on Friday's trade and held that level. Remember, we're at 6-year highs here, and there's really nothing in the way, okay? If I go to the weekly chart and I zoom out here, there's nothing in the way to getting to 110.67, which is our next real target on the top side, 110.67. So so traders have to try to grasp onto something, and they grasped onto this 109.45 level, which is the top side, the underside of the broken trend line. And then we move through another underside of a broken trend line here. We broke above this trend line. Now we went above it here and down above it, above and below it here. I know, but here we came down to it and we fell below it, and then we moved down toward our lows, and we came back to the underside of the trend line here, which I said that patient sellers might look here in anticipation that maybe we've gone too far. Now, the maybe becomes we haven't if the market moves back above these levels. So in trading this week, I'm going to be watching the back of any sort of move back above this trend line. If it goes back above those trend lines, I'm respecting that trend, and you should too, until it tells you otherwise. And so if it goes back above that trend line, then we're going to be looking for a move up toward wherever this top side trend line goes, because I like the fact that we had this trend line, we came to the underside, and so we'll look for it on the top side. And it might be at 110 level, it may be above the 110 level, it may be at the 110.67 level, in which case we're going to be looking at this high right here. Those are our targets on the top side for next week, if the price is able to get back above this level, this trend line, and stay above that line. Now, if it doesn't get above that line, then and in fact we're opening the week below it, but so if we should open, I don't know where the market's going to open, but if it opens up below, we're going to be looking for the market to continue the correction to the downside. What are the targets to the downside? Understanding there's a lot of we're high, but we have to prove ourselves that we can get lower. Well, we need to get below the 38.2 of last week's trading range. That level comes in at 108.43. We need to get below the 50% retracement level and the 100-hour moving average. I'm going to highlight this 100-hour moving average. Why? Because in last week's trading we closed below it, maybe 1, 2, maybe 3 bars. We closed below the 100-hour moving average. In prior to that, we hadn't closed below the 100-hour moving average for 3 bars going back to September 5th. So in the month of September, we've had 6 closes below the 100-hour moving average. 6 bars out of how many bars that we've had in September. Prior to that, we have to go all the way back to August 28th and 29th before we had a significant amount of closes below the 100-hour moving average. So in next week's trading, if we're able to keep the bearishness below this line, we're going to be focusing on this 100-hour moving average to give us the next clue for this currency pair, and we'll leave it at that. All right, I don't know if it corrects, if it goes all the way down to wherever, but I'm still focused though that this trend, this correction or you know, that this is just a correction, that the dollar yen has further moved to the upside. We'll revisit at 110.67, and because that's the 6-year high price. And if it stays below that level, then I think traders will start to look for a further correction to the downside. But I've got to respect the bull market here, and so any sort of clue that the market has the potential to move higher here, maybe it holds a 38.2, I've got and starts to move up, I'm going to respect the bulls first, and ask questions about the correction later. My name is Greg Michalowski. If you like this video and want to see more of them, please go to our YouTube channel and click on subscribe. And if you want daily commentary about the Forex market, you must visit forexlive.com. If you want to learn about trading Forex, come there as well. I'll be there to help you. My name is Greg Michalowski for Forex Live. Good fortune with your trading. Bye-bye now.